Happy Wednesday and also FOMC rate cut decision day. It's probably not going to be a shocker that Powell ends up cutting a racist. Woo! Oh man, sorry, I'm a little messed up right now. Um, Welcome if you are new here. We keep it pretty real here. Because I'm a real human being. I'm not some automated android from the future or a Tesla robot. Rate cut decision. Pretty much, it's pretty clear that the Federal Reserve is going to be cutting by 25 basis points today. It's probably more than likely going to be a hawkish cut. I just kind of really have a feeling, not to mention a lot of other people kind of really are feeling the same way. It could also be very much neutral. So I was thinking about making this video later today, but I'm going to be a little bit busy. So tomorrow, probably going to be a little later video. If you are new here, I am on a random stock journey of just uploading stuff how I see stuff that is going on, and I'll try to put out a new video Monday through Saturday. My brain is a little bit backwards right now. I don't know why. I'm actually feeling pretty great today. For everyone who's been watching these videos, thank you so much. Really appreciate it. Remember to smash the like button. And let me know down below in some comments if you're enjoying this content as well, or if you want me to talk about a different style of stock. Not some big wig guru out there, Wall Street hedge fund dude. Just a small fish in a big pond, and at the end of the day, being a retail investor, I actually really love it. Because I love the guessing game, and when I'm right, it just makes me feel even greater. And when I'm wrong, well, it could be a kick in the nuts, but it could be a great buying opportunity as well. Okay, so we're going to be talking about a couple things in this video. One, rate cuts a little bit. We're going to be talking about Bitcoin here straight off the bat. Then I'm going to get into SoFi. I'm going to be covering SoFi probably in every video. So if you're a SoFi bull out there like me, if that's one of the reasons why you are watching this video, we're definitely going to cover SoFi. What I basically see things happening for them. Talk a little bit about Adobe here. And then I also have a new stock that I just added to my watch list here. If you've seen the last couple of my videos, you're probably already guess what it is. I may depend. I want to keep these videos under 20 minutes. I respect people's time, but I can talk about stocks all day long. So if it goes above 20 minutes, I understand you click off the video, but we have a lot of stuff to cover in today's episode video. On a also side note, if anyone out there is suffering with facial dermatitis, I have a crappy dermatologist. My dermatologist just literally tells me to use cream and come back in like a couple months. I refuse to do that. I just did a complete house detox. And to be honest, my facial dermatitis is actually a lot better. Yeah, crazy, huh? No, I don't want to just smother cream on my body and keep spending more money on, like, cream and stuff like that, right? Would rather air out my house and do some house cleaning. Okay, straight off the bat, Bitcoin. Bitcoin, I've been covering a lot on here because Bitcoin is essentially another way to really see what's going on with the NASDAQ and also the stock market. Morning water, cheers. Already 16 ounces of coffee deep. Woohoo! It's 10:11 a.m. right now, Eastern Standard Time. Bitcoin is slowly trending up. I can honestly, personally see Bitcoin very close to this 50-day moving average of 98K. Maybe if everything just remains kind of really neutral and nothing's really shaking the boat too much. I mean, overall, Bitcoin will essentially recover. This is what Bitcoin does. Bitcoin is a risk-on asset. For anyone that doesn't believe that Bitcoin is risk-on asset, you got to do some self-education, brother or sister. I actually argued with someone online a couple months ago because they said Bitcoin is not a risk on asset. And I'm like, dude, when people want to take risk, when margin trading is high, I am not a margin trader at all. I've never done margin. I just personally think it's bad mojo to really get involved with it. And it goes through these cycles. But you basically see that when people want to take risk, like a lot of people FOMO'd into the stock market after the election, last summer I was buying stock like crazy. I'm not really a crypto dude. Maybe I may get into crypto like in the future, but right now I'm just very much into growth companies more than anything. But Bitcoin follows pretty much the Nasdaq, and you can if you're looking at the Nasdaq and you're like, man, I'm not really too sure if the Nasdaq is just really going to be like consolidating, if the Nasdaq's going to be going up or down. Looking at Bitcoin as like a secondary indicator can really be good. Obviously, on TradingView, I have multiple indicators that I use. I've talked about this one, which is really good, the Keltner channel. Absolutely love it. Keltner channel is really great for primarily swing trading. Swing trading is holding a position really less than like 6 months. It could really be even less than 3 months. I've done swing trading before on stocks where I've held them for like 1 month and I've made like 50% return, 50% return. The Keltner channel is a really good indicator to use. But for the most part right now, doing some moderate, I want to say like long-term trading. So just the simple moving the three main moving averages, the 50, the 100, the 200. That's going to be your bread and butter. So if you're unsure about how to really set up like a chart, start with those on the daily time frame. So every single candlestick here is 1 day. So as you see right now, the Nasdaq has pretty much done a V shape to get above the 50-day. Bitcoin is definitely lagging, but we're away from the 80K level. Obviously, if we break the 80K, the bare bottom of Liberation Day was 74K. So we could very well bounce off this area. But I mean, if everything's going to be just kind of really trending up, the major indexes, you got the Qs, pretty much solid V-shaped recovery. Nothing too crazy, like no crazy COVID V-shaped recovery. But I mean, hey, it looks like it could be a buy the dip opportunity. Overall, the market right now is just waiting for Powell to see if we go ahead. Firstly, we need to get a rate cut. There's some people that are saying that a rate cut may not even happen. I personally believe that a rate cut is going to happen today, but I am more so looking that we're probably going to be getting a hawkish rate cut. That's going to be signaling then to the administration in the White House, the Trump administration, which is probably going to go a little bananas and be like, okay, we're going to name our new Fed chairman. This guy is a doofus. And people are going to start paying attention to whoever the new Fed chairman is going to be. So as soon as the new Fed chairman is going to be announced, if Powell says, I will not cut interest rates until I leave, no more interest rate cuts, no more interest rates cuts, unless the economy falls off a cliff. That's going to be really a kick in the nuts overall for the stock market, especially if we get bad data. The Fed could very well be pressured at that point, considering the fact right now the Federal Reserve is really much divided. Half of the Fed wants more cuts, half thinks we shouldn't cut at all. It's really chaotic. Not to mention it's all political. But whoever is announced as new Fed chair, it's going to be all eyes on them. And I mean, if they're going to be like, hey, as soon as I get in, I'm going to do like 1 basis point cut automatically, boom, that's like, then the market's going to be pricing in the future. And that's what the stock market does. Okay, so talked about Bitcoin, SPY, rate cuts. Get into SoFi here. What is SoFi doing? This is the 5-minute time frame. SoFi is really not doing a whole lot. Obviously, using the 50, 200 is not the best on the 5-minute. 5-minute, I pretty much like looking at EMAs, exponential moving averages. Little different than simple moving averages like the 50, the 100, and 200. But SoFi is not doing a whole lot. It's kind of really humorous because SoFi just did an offering. I spoke about that in my previous video. I said the offering is bullish because they're diluting myself along with the management team at all-time highs. They're not diluting at all-time lows. Penny stocks dilute at all-time lows, then they go lower. Okay? SoFi is a profitable company growing quarter over quarter, year over year, and they're diluting at all-time highs. Do you trust the management team? It's yes or no. If you do, let them run their company. The only thing that is in the back of my mind, and this is where I could be wrong, not necessarily on the profits that I have made so far, because on my private profile, I am up by almost 300%. On my public profile here, my Bung profile, I am up over 100%. I haven't taken any profits on SoFi yet, but for whatever reason, if Wall Street says, okay, enough is enough, we're going to be giving this stock a bank multiple, that's going to be a kick in my nuts because I am looking at this company as a fintech. And if they get a bank multiple, it throws off my entire strategy. My entire 10-year strategy is that this is going to be a financial giant institution. And we are going to be trading at a very rich level. And Anthony Noto has thrown out the T word for trillion-dollar company over the next decade. And I mean, the amount of money that I have invested in this company, that is beyond life-changing money. I'm 37 right now. I'd be 47, and if everything pans out, yeah, you're be like that's a 7-fig style move. And I'm not the only one. There are people even more money invested in this company than me. So you're looking at a 10-year stance. It is incredible because a $1 trillion market cap very well would mean, I think, like a stock price would be, since we just got diluted, I honestly really don't know. I think before the dilution happened, I think that would be at like an $800 stock price. But once again, you would have the stars need to all align. We're going to have a couple recessions in the near future. Anthony Noto has to get us out of those recessions. But then again, we were in a recession in 2022. Mainstream media wasn't covering it, but we were in a recession. We had 2 quarters of negative GDP. Now, obviously, it got flipped very quickly, and the recession ended, but we were in a recession. There's different styles of recessions. This is where people forget. When I say the word recession, I'm talking about a textbook definition of a recession. I'm not talking about a great financial crisis. Okay, the great financial crisis was the end of the second secular bull market. But a recession could very well be something like a crash in the stock market, in the economy for a V-shaped recovery. It doesn't have to be a 19-month long, hellish, bend me over style correction, or it wasn't even a correction, it was a recession. Okay, as long as Anthony Noto can get us out of that stuff, then we're going to be good. And it is a very simple question. Do you trust the management team? Well, Anthony Noto has led us through 2022 when interest rates were higher than they are right now. Interest rates are still damn high. Um, I'm a veteran. I have actually a fellow brother of mine, veteran. He's actually using his VA loan, and it's pretty funny because even using a VA loan, if he had used it over 1 year ago, it's like not even that much of a difference. It's like right now, instead of getting I believe he's getting like 5.8%, 5.7 or 5.8%, I can't remember. But last year, before all the rate cuts pretty much happened, I believe he would have been like maybe 6.4, 6.3 or something like that. It's nothing. Okay. Now going from 6.3, 6.4 to 4.4, 3.4, that is very different. And if we do see these rates come down significantly, SoFi is going to be benefiting. Here's the thing that makes me a little nervous. Anthony Noto has talked about getting in more into the the government is talking about basically delegating student loans to private institutions, aka SoFi. SoFi can benefit with making a lot of money from getting more student loans refi. But so Anthony Noto has stated that they can go into the housing market, basically doing a lot of loans. That will push them more into a banking multiple, in my opinion. Beyond half of the company's revenue is through lending. So my whole strategy is based around them getting a fintech multiple. If SoFi can get a fintech multiple, we're pretty much good for the future. Can SoFi go to $100 in the next coming years? Yeah. Can they do it short term? Short term, maybe 6, 12 months. Something would really have to happen that would change everything for the better. Like that would be like, because there are perma bulls out there. I don't really like giving any price targets, but I mean, if everything tends to go the way it's supposed to, this stock could very well double by the end of next year. So $27 to 54, very realistic with the growth rates, triple beating, guidance, EPS, revenue, rate cuts coming down, more rate cuts being priced in. Sure, $54 very possible. Permables like over $100. I mean, anything's possible, but it's when you run your projections and you basically listen to conference calls, that is just very unrealistical if we do get a bank multiple and if Wall Street kind of really screws us. Okay, enough of SoFi. Already talked about them. I want to go ahead and talk briefly about Adobe because Adobe is a new position on my account here. If you are new here, I'm basically doing a public account challenge for motivation purposes to really show that you can take you can take any amount of money. I'm going with 30,000. The challenge is going to be officially starting after the new year. If early into 26 the stock market falls off a cliff, I'm going to push this challenge. I'm probably going to deposit more money into here to buy the dip, and it's going to go from 30 to maybe 50. And then the challenge is, because right now the challenge is 30 grand to 6 figures in 12 to 18 months, but it really dictates. Obviously, if the economy falls off the cliff early next year, I'm going to put more money into here, and then the challenge is probably going to be 50 grand to 100K by the end of the year. Doubling your money is extremely possible. That's actually beyond possible when you buy the dip and great companies that have been beaten down by 25, 30, 50% easily. If there is no buy the dip opportunity in the first half of the year, well, then we'll just go ahead and continue to cover and continue to basically just trade here. But overall, Adobe was a new position of mine. These are my lucky 7. I was buying SoFi during Liberation Day, but I did add recently, if SoFi does break below $25, I'll go ahead and probably nibble on in some more shares, to be perfectly honest. But AMD is my biggest position on this account. It's kind of funny because on my private account, AMD is my second largest position. AMD is my largest position on this account, cost basis wise. So my cost basis on SoFi is like 4,800 bucks. My AMD cost basis here is nearly double my SoFi. So Adobe, I ended up buying last week. I honestly wish I bought more of this. Like, they have earnings today after the bell. They just had record-breaking AI sales for Black and Cyber Monday, Black Friday, Cyber Monday. It's Adobe has fallen off of a cliff because of AI fears. My plan with Adobe is that if they do run up very quickly, I'm probably going to shed some profits. What I do with those profits, I'm honestly really looking more at AMD. Like, AMD has not even started to rock and roll. So I could very well be making more profits here for building a larger AMD position. Because right now my AMD position on this account is 24.52%. I would feel comfortable getting AMD above my SoFi position, even though my SoFi position is like up there because SoFi has ran up. But yeah, I am very, very bullish on AMD here at the end of the second half of 26. Second half of 26, OpenAI has made the commitment to AMD that they're going to be buying AMD chips. This is so messed up. Nvidia is giving OpenAI money that OpenAI has made through investments. Nvidia is giving OpenAI money. OpenAI is taking that money and buying AMD chips. It's a slap in the face with Nvidia, but at the same time, hey, AMD, let's go. Like, their chips are premium chips. So Adobe here, if they run up, that's awesome. I may take some quick, I may sell a little bit of my profits, not my entire position. But overall, my game plan with Adobe is to really see where this goes. Adobe tends to have these really bullish cycles significantly around AI. And if everything basically pretty much aligns for another AI run in 26, we could see a very volatile, a very fast move up. I mean, you're talking like back in May 23 when AI was rock and rolling like crazy, Palantir was taking off. This stock ran very quickly from the mid threes all the way, pretty much like near a double up here. And as you see, Adobe can fall off a cliff. Pretty much reminds me of Tesla. I've made money through Tesla over the last couple years. I got into the stock market April of 2020, the COVID low. Made life-changing money all throughout 2020, 21. I didn't know what the hell I was doing. All I did was just buy the dip on all companies. I bought the airline stocks that were beaten down. I bought Viacom, CBS. I bought the cruise lines. I just made like 200% here, 300% here, a little bit over 100K, well beyond 3x my money, and you just buy the fear. And like I said, I didn't know what the hell I was doing. You can say that I got extremely lucky, which, yes, I mean, I definitely did. But then again, is it really luck, or is it buying the fear on great companies? Adobe is a great company. I use their products every day. So therefore, the company is just really it's a fear. It's fear. It's just AI fear. But if we do have these volatile swings like in Tesla, where the stock goes up very quickly by 50-40%, and I mean, hey, if you get near the bottom and you sell near the top, you can make profits. So, I got to really listen on the conference call today. I actually just started listening to some conference calls a little over a week ago to Adobe. They're definitely very lengthy. So I'm going to be listening to that, probably talk about it tomorrow. This video is way longer than I intended it to be. I'm so sorry. PayPal. I just really want to talk very quickly about PayPal because I'm thinking about opening a position into PayPal. Probably not on this profile, but probably on my private profile, and I'm just going to be talking about it. And hypothetically, if Adobe does run up, I may actually swap out my Adobe profits for some PayPal. PayPal is hated, very similar to SoFi. PayPal is a true financial institution, unlike SoFi in a way. Even though SoFi is a financial institution, Wall Street has just really not deemed them just yet. Retail, we show up a little bit early to the party. Hopefully we do. I got into this stock right after the election. I ended up buying right here in this consolidation area right after their earnings. Basically, they fell off. And I ended up making a very quick buck. I ended up selling on this gigantic down day here. I believe I made like a little bit over 20%. Very quick money. Nothing crazy. Just simple trading. Trading money. I think my position size was about $5,000. So little over $1,000 if I recall. And really glad that I got out of the stock. Because I mean, obviously $87. The thing about SoFi is that they're going to, not SoFi. The thing about PayPal, we have a lot to really talk about PayPal. They are absolutely hated. They are a profitable company. They are a growing company. They're growing, but their stock price goes down. Big problem. Okay? I'll say this again. They are growing. Their stock price goes down. Growing. It looks like they're giving dividends now. A lot of people are saying that PayPal is now a value play. Okay. You can make that argument, and I will agree with you partially. But they are growing over the years, but their stock price goes down. There is a reason why they ran up so much. It's called quantitative easing. What is the Federal Reserve going to be doing relatively soon? QE. Right now, the Federal Reserve is conducting, or they've been conducting, quantitative tightening, QT. Their balance sheet has been getting smaller over the last couple years, raising up interest rates. Now, the money printer is going to be coming on. Their balance sheet is going to be expanding. So therefore, I'm looking at this company. I believe a new CEO is stepping on in. I gotta dedicate more time to really listening and diving into this company with listening to the conference calls. But can PayPal potentially do a double up here? Oh yeah, this is just a joke. It's PayPal is not like, I've been using PayPal my entire adult life. I've actually been using PayPal in my teens. I've been on the internet since I was like 12 years old. My mom, I was using her PayPal account all throughout my teenage years because I couldn't have a PayPal account. I would always give my mom money, my allowance money. I'm like, hey, I need to buy some stuff online. My first job in high school was building computers, custom computers back in 2004, 5, and 6. So I would buy stuff on eBay, and what the hell are you using? You're using PayPal. This company has been around and it's not going anywhere. I run small businesses online, side hustles. I use PayPal. I get paid by PayPal. Like I transfer money. I have I have a full blown PayPal account. Um, I've been offered PayPal business loans. Like, give me a break. I really believe this stock could be a very easy double up opportunity here. So I'm going to be covering more PayPal, probably talk about it more tomorrow. I got to do some more research on here. Um, Tomorrow, we'll talk more about SoFi, Adobe, PayPal, Fed cut decision. Subscribe for more content, and I'll see you all later. Let's hope and pray good stuff happens today. But then again, if bad stuff happens today, it's just going to be buy the dip opportunity on great companies. Okay, thanks for all watching, and see you in the next one. Later.